In early September 2025, XRP is trading right around the $3 level, a tense pivot point where bulls and bears are locked in a standoff. On one side, enthusiastic buyers point to a wave of positive signals, a blockbuster regulatory settlement, with the SEC's skyrocketing odds of a U.S. spot ETF and growing adoption of Ripple's own stablecoin and DeFi ecosystem. On the other, skeptical traders warn that the technical setup is still fragile, with a descending triangle consolidation and key support just below at $2.70. As the market holds its breath, every data point and chart pattern takes on outsized importance. Is this consolidation a coiled spring ready to launch to new highs, or the calm before a breakdown? Let's peel back the layers of chart action on chain metrics and speculative positioning to see where XRP might head next, whether that means testing $3.60 or tumbling back into the mid-$2s. By mid-last week, XRP had been trading in a tight sideways channel after a late summer rebound. The daily chart shows a clear pattern. XRP's price has formed what traders call a descending triangle, with a hard floor around $2.70 and a sloping ceiling of lower highs stretching to roughly $3.12. Some analysts also describe it as a symmetrical wedge, noting support rising from roughly $2.80 and resistance around $3.30 either way. The setup is tense. A series of tests at the $2.70 area have held, giving the appearance of a literal triangle or wedge squeezing the price tight, but if that low breaks on strong selling, it could signal a quick slide. In the descending triangle scenario, a break below support might drop XRP toward the next major technical floor near $2.50, aligning with a noted fair value gap zone around $2.35, $2.65. Conversely, if buyers can power XRP above the $3.12 level, the pattern would break bullishly. Chart targets in that case move up rapidly past $3.60 and potentially into the $4-5 area or beyond, as some analysts have noted. In short, a decisive move one way or the other from this triangle could unleash 30 to 70% swings. Now, late on September 8th, the price is wedged near $3, just below the known resistance at $3.12, with volatility suppressed. Traders are glued to volume profiles and moving averages. The 200-day moving average sits in the mid $2.50 south as a distant floor, while the 50-day is bumping up into the $3.10 region. Momentum indicators are mixed. RSI and MACD have started to perk up from oversold levels but still have room to prove bullish continuation. Above all, the chart is telling us that something is going to give soon a breakout or breakdown, and that key leads lie in broader market flows and on-chain signals. Beneath these price moves, the futures markets are telling a clear story. Open interest in XRP futures rose significantly over the summer, then cooled off into early September. The chart above from CoinLast shows futures open interest measured in billions of XRP, peaking at roughly 3.3 BXRP in mid-July, and then easing back toward about 2.5 BXRP by September 8. In dollar terms, that drop took overall open interest from around $11 billion at its peak, down to roughly $7.5 billion today. This decline indicates that the earlier speculative fever is subsiding. Long and short positions were trimmed through late summer, supporting that, on Binance, the largest exchange by volume. The estimated leverage ratio, the ratio of futures IA to spot reserves, has been falling back toward its historical average. In fact, CryptoQuant's data show Binance's XRP leverage ratio hitting highs above 0.6 during the July surge, but then retreating to roughly 0.2 to 0.3 by late August, about its mean value. In practical terms, traders are not driving positions to extreme leverage at these levels. This reset of leverage matters. It suggests a reduced risk of violent liquidations, making the market less prone to cascade crashes on small moves. Indeed, funding rates and basis have also stabilized to normal levels, implying fewer highly leveraged carry positions chasing yields. One positive note is that on-chain liquidity flows have begun to show signs of accumulation. Recently, aggregated spot net taker volume, the difference between buy and sell volume by active takers, has returned to around neutral, rather than being grossly negative. Cumulative volume delta CVD on major exchanges has actually ticked upward, hinting that buyers and sellers are nearing balance, a classic early sign that long-term holders may be starting to nibble at dips. In sum, the futures data suggests a market in cool-down mode, not overheated, or not panicking, but waiting to see how XRP handles its technical pivot, looking specifically at leverage. The blue line in the chart above shows Binance's estimated leverage ratio plotted against XRP's price black line. We see that the ratio spiked high in spring 2025, but as price climbed above $3 and then pulled back, leverage fell back sharply. By late August, it's roughly flat along its long-term trend. This normalization underlines the same point. Traders have unwound many overly aggressive positions. Meanwhile, funding rates on perpetual futures have languished near zero, not shown, reflecting a lack of one-sided bets. These dynamics lower open interest and balance leverage, tend to support price stability. In fact, as Cointelegraph reported, the Binance leverage metric is back to its yearly average, and funding has normalized to typical levels. Such conditions mean that a sharp move either up or down could attract fresh momentum, since much of the speculative rubber band has already snapped back. In contrast, if leverage remained at extreme highs, even a small price move could trigger outsized liquidations. That is no longer the case, which adds a measure of caution to either side. Another angle. The futures premium, essentially the basis between futures and spot, or between perpetual and fair price, has come down from its mid-year highs. The chart above, which tracks the one-week futures basis in percent, shows that by August 10th, XRP futures were sometimes trading at double-digit premiums over spot. But as of early September, that premium is only in the single-digit range, roughly 6 to 9%, as the chart shows. In other words, the incentive for traders to long XRP via futures has calmed. Cointelegraph notes that funding rates are back to normal quarterly levels, implying a neutral tilt. This too lines up with the narrative. The crowded trade is largely unwound. If the net premium were skyrocketing, that would be a red flag of excessive euphoria or risk-seeking. If it were deeply negative, that would suggest heavy pessimism. Instead, the current modest positive premium blue line mid-chart tells us the market is roughly balanced. In a thriller-like twist, it's this very equilibrium that makes the coming breakout so suspenseful. A push or pull in either direction. This won't face abnormal leverage resistance, allowing price action to move more cleanly on fundamentals or fresh catalysts. On the technical and chart side, there are hints of a developing bullish divergence relative to other assets. Notably, analysts have observed that XRP has been consolidating near its prior all-time highs for months, while Bitcoin and Ethereum have moved to new peaks and are now pausing. The XRP-ETH ratio in particular is showing early signs of bullish divergence. In plain terms, it means that XRP is flat or even slightly up, while ETH is drifting sideways. Often an indicator that the underperforming asset XRP may be ready to catch up. One crypto strategist, CrediBOL, points out that XRP's 9-month lateral range around the $3 mark, combined with several positive RSI-MACD setups, is similar to conditions before past rallies. Moreover, he notes that the 100-day exponential moving average around $2.77 has held as support, and a Fibonacci retracement level at $2.99 could be the next barrier if momentum picks up. Taken together, these are early technical clues that the tide may be turning in XRP's favor relative to the altcoin sector. It isn't decisive proof, but in the high-stakes environment of crypto, even a whisper of divergence can move markets as eager money tries to front-run the next leg up. Above all these charts is the looming question of regulation and ETFs. The drama that dominates XRP headlines. For many investors, the single biggest reason to watch XRP right now is the rumor of a US spot ETF that would include XRP. That narrative has taken off because of a truly watershed event. On August 8, 2025, the SEC officially ended its lawsuit against Ripple. The two sides jointly asked a judge to dismiss their appeals, which means the previous injunction and $125 million penalty simply stand as final but uncontroversial law. As Reuters reported, this leaves $125 million fine intact and ends one of crypto's highest-profile lawsuits. Ripple's chief legal officer said the dismissals marked the end of the case. In practical terms, this provides regulatory clarity that was absent for years. XRP is now free from the looming threat of an ambiguous SEC ruling. U.S. regulators have implicitly accepted that XRP itself is not an unregistered security in the way it was sold publicly. Aside from that fine, this newfound clarity has sent a ripple of optimism through the market. In fact, after the news of the settlement, Polymarket, a crypto prediction platform, showed traders pricing at approximately 90% odds of an XRP ETF approval. Analysts cite this record-breaking approval probability, nearly the same level as Bitcoin's ETF odds before approval. It's evidence that institutions believe the SEC will greenlight an XRP ETF soon. This ETF storyline has legs. On the fundamental side, big institutions are aligning. For example, CME Group, the giant derivatives exchange, announced in April 2025 that it will offer XRP futures starting May 19th, subject to final regulatory checks. That move explicitly recognizes XRP as a mainstream digital asset. The press release notes a microcontract 2,500 XRP and large 50,000 XRP version will be available. Cash settled against a XRP USD reference rate. One especially intriguing development is that BlackRock, the world's largest asset manager, has inserted itself into the Ripple ecosystem in a high-profile way. Ripple confirmed that Maxwell Stein, BlackRock's digital asset director, will speak at Ripple's Swell 2025 conference in New York. That event, November 4th to 5th, 2025, will feature Ripple's own CEO and other top execs. BlackRock's attendance is unsurprising after all. BlackRock launched the first spot Bitcoin ETF in 2023. And they have Ethereum ETFs, but it adds fuel to the speculation pot. Investors are asking if BlackRock is cozying up to Ripple's event. Might it back an XRP ETF down the road? Officially, BlackRock has said it has no immediate plans for an XRP ETF, and CEO Larry Fink has publicly downplayed any imminent XRP product. But the talk persists, especially since Ripple's win in court makes any future XRP spot ETF far less controversial. Meanwhile, other well-known firms are already in motion. Grayscale, Bitwise, 21 Shares, CoinShares and others have filed applications or updates to applications for XRP-based ETFs. The SEC has not yet approved any of them, but it has set a review deadline of mid-October 2025 for all pending crypto ETF proposals. That means decisions could come as early as late October. Notably, reports say the SEC has postponed final judgments on several big names, Grayscale, CoinShares, Bitwise, to align with that October 19th deadline. If the SEC has decided to treat the XRP cases similarly to Bitcoin, Ethereum, you could see multiple approvals or rejections announced around that timeframe. In fact, market watchers suspect that several spot ETFs might launch at once. Not just Bitcoin and Ethereum, but potentially Solana and others too. A catalyst like simultaneous approval could send a shockwave through crypto prices. The suspense is high. Some analysts think that if even one or two XRP spot ETFs clear the SEC, a flood of institutional dollars, possibly billions, could rush into XRP. One study quoted in reports estimated up to $5 billion of inflows in the first month of a US XRP ETF, figures that would double the current market cap, though skeptics caution that kind of demand is far from guaranteed. Is also the broader stablecoin and ledger adoption angle. Ripple has been quietly building its own ecosystem features, which give XRP an edge in use case credibility. The new Ripple-issued stablecoin, RLUSD, Ripple USD, is a prime example. RLUSD launched in late 2024 and has grown rapidly. Recent data shows its market capitalization now exceeds $730 million. This is not a minor altcoin. It's in the top 15 stablecoins globally by market cap. For perspective, it's roughly on par with the largest corporate debt-backed stablecoin. PUSTA, RLUSD, has been sanctioned by regulators. It's registered as a money market fund by the New York DFS, is backed 1-to-1 by US dollar deposits. Its growth signals that institutions are willing to use XRP infrastructure for dollar liquidity. More market cap in the XRP ecosystem means more demand for the token when RLUSD is sent across the ledger, for example, settlements on ODL routes. On top of that, the XRP ledger itself is gaining real usage. DeFi TVL total value locked on XRPL is still modest, roughly $60 million by most measures, but that's up from near zero before recent protocol upgrades. The AMM automated market maker features activated this year have let decentralized exchanges and lending protocols sprout on XRPL, slowly adding value. More significantly, big real-world asset pilots are using XRPL. For instance, Dubai's land department is tokenizing real estate titles on a custom XRPL chain, showing institutional trust in the technology. All of this matters for XRP because these projects often need XRP as a bridge currency or token of liquidity. In the bigger picture of blockchain finance, XRPL remains a small player. Total on-chain tokenized assets, or WA real-world assets, including tokenized bonds, loans, etc., stand around $27.85 billion across all public chains. XRPL's share is just under 2%, roughly $309 million. So it's a niche ecosystem right now. But each incremental partnership, like the Abu Dhabi Bank Onyx partnership, and each new project pushes that number up. Some analysts argue that XRPL's unique features, built-in compliance controls, fast settlement could give it an institutional edge in tokenized finance over time. So, XRP could benefit indirectly as the ledger grows. Finally, we weigh it all together. The bulls have amassed a long checklist of positives: regulatory clarity, thanks to the SEC settlement, ETF momentum with odds near 90% in key players positioning, institutional adoption signals from CME futures to BlackRock and stablecoin, growth and technical improvements from RSI divergences to normalized leverage. This narrative argues strongly that the $3 level is a launching pad, not a peak. If the bulls win, say XRP breaks above the $3.12, $3.30 zone decisively, then $3.60 is indeed a plausible next stop, en route to $4 or higher. On-chain metrics like falling open interest mean less headwind and renewed volume in buying. If an ETF rumor breaks, could propel price quickly. Some chart models suggest even 50 to 100% rallies in a best-case scenario for XRP. However, there are real risks. The biggest is simply that the descending triangle pattern still reigns. The market has seen the price trapped under overhead resistance for weeks. If any negative catalyst hits, a general crypto market pullback, a rejected ETF rumors, or even a harsh news headline, the risk is a drop back to the lower support. On the downside, a breach of $2.70 could quickly accelerate toward $2.50. The next big moving average support, and even the low $2 range, if that fails. Traders remember how XRP dipped into the $2.20, $2.30 zone back in July after a breakdown. The fair value gap near $2.35, $2.65 on the chart would be a tough draw to cross from above. Moreover, skeptics argued that if Bitcoin and Ethereum are resetting, altcoins like XRP could remain sideways for months regardless of individual news. Even with Ripple's win, some institutional investors might view XRP as a more exotic cross-border payment bet and give it a pass compared to Bitcoin. In this high-stakes environment, the tone is inevitably dramatic, like a thriller where the lead character teeters on a cliff. Kea, as the voiceover narrator here would warn, no one has a crystal ball. The market could very well burst toward $3.60 or beyond if that ETF green light arrives and bullish sentiment dominates. Or it could slip under $2.70 like a trapdoor, catching late bulls by surprise. For now, the sensible approach is balance. Give weight to each scenario and manage risk accordingly. The next few weeks as the US ETF deadlines approach and market-moving news breaks will likely decide whether XRP stays a cornered bull or unleashes a breakout. Until then, traders and investors watch every candle, every on-chain metric, and every press release. Wondering, will we see $3.60? Or is this the climax before a twist?